One of the distinguishing characteristic of bearish moves in the market, or when the market is going down, is that there is a higher amount of intraday volatility. What it means is that suddenly there will be market will be going down, it will have a rally, it will go down again. So it offers a good opportunity to make money for those who have studied this and those who have experience with it. For people who are new to it, it is not very easy because they have never seen moves like this. So Friday is a good example of what happens on a highly volatile market and how you can profit from it. This is a small example of a trade which I did yesterday. And if you see TQQ or SPY, it doesn't matter what you see, basically it's the same thing. You will see that there is a so let's see SPY or TQQ, and both we'll look at both TQQ and SPY. And if you see intraday, the overall the SPY was down around 0.65%, but on a lower time frame, if you look at it, this is where it opened, then it went down, there was a counter trend move, and then there was a good nice move here, which went up, and then again there are a couple of down moves also, tradable kind of a thing. But the thing is that here you'll see that it was a very nice momentum burst kind of a setup, but in order to profit from this, and you can see TQQ and it will look the same. So it doesn't matter whatever you're looking at, it is going to look the similar kind of a thing, because whenever there is a bearish market, one of the things which you are going to notice is that the stocks will move, all stocks will move together, and that is why when you look at like a breadth during bearish market, you will see about a normal breadth. That means on a normal day, if there are 200 stocks which are up 4% plus, or 100 stocks down 4% plus in a bearish market, you're going to get a lot of stocks which will be up 400%. Next day there might be a lot of stocks which are down 4% plus, and this is a very common thing. But if you are a skilled trader, you can profit from this, provided you have the right kind of a setup and tools for doing this. So one of the ways to find out if like the market has money coming into is this new high, new low indicator, which tells you when money has started flowing into the market, or buying has come in. Not really money, it's like buying has come into the market, or selling is dominating. So when the selling is dominating, you had like this red thing down, and then suddenly you saw around 214, around 220, when money started coming in, or like the buying started coming in. Suddenly there was a small counter trend rally, but that could have been traded very profitably, and I'll show you. So when this rally happened, this is where the market was, and if you look at it, right, and this is essentially how at the same time, if you look at like this was the thing which happened, right, and even on a chart, if you go and look at that particular time period, what you'll see is that the market made a move, and that was 2.33%. But the real fun is in trading something which is high priced during this particular time period. So if you look at, this is an intraday chart of SPY, TSLA, TQQ, and DIA. Essentially, I trade high price stocks. So but I use a confirmation or a multiple confirmation kind of approach. So in this case, what happens is that when this period, if you look at this period, that is when you already had the confirmation that there was a buying coming in for that particular time period, right? And then there was a clean breakout. And if you see here, this was like a clean breakout. You can see that much better on a see here. This was a clean breakout, and in just 20 minutes, the stock went up $16, right? And that was like in a very tradable kind of a move. So this is where, this is the bar on which I entered, putting a stop here, and then exited it when it started reversing, basically. So this way you can profit from the volatility. And what I do is I monitor some of the stocks which are highly volatile, higher price stocks, and then Similarly, like Amazon also was the same time. You see, Amazon made a move, and Amazon made $18 move or $21 move, or here Amazon made a move and which was like $17. So you can trade from the SPY signal, because if you see the SPY is breaking out, but instead of trading SPY, because SPY doesn't make very big move, you can trade an individual stock, because in the bearish market everything is correlated and everything moves together. So taking the SPY as an example, I trade either one of these stocks, Bentex, TTD, or Amazon, or sometimes all of them. So that is one of the ways in which you can profit from the volatility, and that volatility, if you can target it on a lower time frame, you can make money using the tendency of the market to make bigger moves during bearish phases. So what works in bearish phases, obviously if you're short it works, but you can also make money intraday by understanding that during intraday, during bearish period, there are more bigger moves. Magnitude of the moves is much bigger on a lower time frame than normally what you get. In a day you will get like 2 or 3 up and down moves, and that can be very profitable for trading, day trading on a lower time frame.